Hey guys, Daniel here and welcome back to the Finance Channel. Today I'm going to be going through Shift stock, ticker symbol SFT. In this video I'm going to go through Shift's business model, revenue growth, financials, competitors, and make sure to stick around till the end of the video where I give my long-term projections on both revenue and a price target that includes dilution, which is something that a lot of people overlook. So anyways guys, let's get into it. So Shift Technologies, ticker symbol SFT, is a company trading at around $8.17 per share at a market cap of $685 million. This is a newly public company emerged with a SPAC, a Special Purpose Acquisition Corp, back in August and September. It hit highs of around $15 back then, and it's been on a downtrend ever since the merger took place, now trading at around $8.17 per share. Back in November, the stock took a nosedive down to around $6.40 after their earnings report, where they spent a little more than expected on marketing and advertisements. And being a newly public company, obviously the management doesn't have too much experience when it comes to conference calls, so they weren't really answering analysts' questions to a high level, and analysts were having to repeat themselves. It was just kind of one of those growing pains that comes to being a newly public company. But because of that, we're getting an awesome deal. Anyways, guys, let's get into the business model here. So Shift is an e-commerce used car platform where individuals can buy or sell used cars. I'm going to take you guys from the perspective of both a seller and a buyer on a Shift's platform. So let's say you're a seller. What you do, you fill out a form, and in 10 minutes, you have a quote on your car. If you want, you can take that quote. If you don't have to. There's no harm in doing it. If you accept the quote, your job is done. Shift gives you your money, they take the car, and you're done. It doesn't matter if the car sells or doesn't sell, you got your money, and you don't have to worry about it. That's one of the benefits of selling to Shift and its competitors like Carvana or Vroom. You sell it, and you're good to go. Next, Shift takes the car to their warehouse and reconditions it, cleans it up, does a 150-point inspection, and takes professional pictures of the car. Then they place it onto then they put it onto their site, Shift, where individuals can buy the cars. Very simple process. In terms of selling, in terms from the buyer's perspective, you browse through the Shift app, you pick a car that you want, you can view its mileage, you can view a full 360 and internal picture of the car, and Shift automatically has a nice kind of view of exactly where certain damages are on the car. It's just a very transparent image and a really frictionless experience when it comes to buying the car. One of the benefits of Shift and one of the kind of its differentiating features is their ability the buyer's ability to request an at-home test drive, where an employee from Shift will bring the car to your home. You can test drive the car, and you can just buy the car straight up right there, and you're done. If you don't have to. No harm done. But that's one of the interesting things, providing that at-home test drive experience. So that's kind of what Shift is. They have a kind of an interesting process here, very frictionless, very nice interface. I really recommend you guys going to shift.com or downloading their app and just kind of browsing through it and going through the steps. Maybe putting your car into the quote bot and kind of look at just the process and general feel of the app. That's the best way in finding out how good a company's product is. So here's an opportunity to look at the total addressable market for Shift. The used vehicle sales in the United States for the year 2019 was $841 billion. Now, if we want to calculate Shift's TAM from that, we take around 50%. Shift is really targeting that peer-to-peer transaction industry. They're really trying to digitalize that and take it to e-commerce. Currently, less than 1% of the auto retail market is e-commerce, meaning it's ripe for disruption. And Shift is right there alongside competitors like Vroom and Carvana to take advantage of that. In terms of their balance sheet, we can't really get a good sense of it because it doesn't include the money that they just recently got from this merger. I'm going to make a video right after their next earnings report, and I'll go through their numbers, their balance sheet, and just give an overall update, so stay tuned for that. So in terms of one last thing with the balance sheet, even where it is right now, there aren't any issues with it. I mean, I guess they could have a little more cash, but it's not like these guys are going bankrupt anytime soon. In terms of competition, it's mainly Vroom and Carvana. Carvana is a $45 billion company, and Vroom is around at $6 to $7 billion market cap range. They all provide similar features, but one of the interesting things about Shift is that at-home test drive experience. Shift benefits from something known as price shopping. In the used car industry, or just car industry in general, or rather in the used car experience isn't really favored over price. If you want to buy a used car, you're looking for the best value for your dollar. Experience isn't going to be looked at that much when it comes to buying a used car, which really benefits Shift, which is in this sense the underdog, to just kind of come out of nowhere and take a lot of market share from Carvana and Vroom. I mean, together, factoring in all revenue that Carvana, Vroom, and Shift did in all of 2019, they still make up less than 1% of the used car market in the United States, which is very interesting. The the Net Promoter Score, which is customer satisfaction for Shift, is much higher than Vroom and a little under Carvana, which is great to see. And you can't really compare it to Apple and Mercedes and GM. You really just want to compare it to Vroom, Shift, and Carvana. Obviously, very good on the Net Promoter Score. I think it's good that they're above Vroom. I don't think they're going to get above Carvana, but honestly, they don't need to because of that price shopping kind of experience. So here we have just kind of a view of Shift's earnings and revenue. Obviously, right now, Shift is an unprofitable company, losing around $1.74 in EPS for the year 2020. In my opinion, Shift is going to become a profitable company in around 2024. That's where I think they're going to start turning break even and turning a profit. Obviously, they're expected to lower their loss next year to around $1.18 loss in EPS. Again, I think that's going to continue to shrink as the years go by. In terms of revenue growth, now this is the very exciting thing when it comes to Shift, their revenue growth. This year, they're expected to do around $200 million in revenue. Next year, they're expected to grow 103% to almost $400 million in revenue. Now, this is the exciting part when it comes to Shift. Here we can take a look at revenue projections. They're expecting around 103% growth for the year 2021, which puts revenue at around $400 million. Now we can have some fun here. And I think I'm conservative with these revenue growth numbers. I'm really expecting a big decline over the coming years when it comes to revenue. I'm expecting 2022 for revenue to grow 85%, in 2023 expected to grow 70%, 2024 growth of 55%, and in 2025 growth of 40%. So kind of a steady decline. I think that's pretty conservative when it comes to revenue growth, declining by 15% per year, and at this point we can only expect beats when it comes to revenue. And with that, we get revenue of $732 million in 2020, $1.25 billion in 2023, $1.9 billion in 2024, and $2.7 billion in revenue by 2025. Now this is where things get exciting, because now that we have our revenue expectations for 2025, we can play around valuation numbers and come up with a price target. So if we look at the price to sales of Carvana, Vroom, and Shift, we see that Carvana's price to sales is 10.2, Vroom's is 4.6, and Shift's is 4.58. Now, in my opinion, Carvana is kind of justified to have that higher price to sales because they have a higher gross profit margin. Vroom's is similar to Shift, but it's a bit of a bigger company, meaning that they have a little less growth than the Shift has over the coming years. Now, I'm going to be really conservative when it comes to this price to sales valuation that I'm going to show here. And I'm going to show you guys why in a second here. I'm going to pick up price to sales of 2. Reason behind this is because their gross profit margin, or just generally the gross profit margin for used cars, isn't that high. I mean, generally 5-10% gross margin on the cars would be excellent. So a price to sales of 2, in my opinion, is very fair. Could they trade at a 3 or a 4 price to sales down the road? They very well could. But I want to look at the base case scenario, the worst case scenario. And if we can make good money there, we can only expect better going forwards into the future. So with a price to sales of 2 and revenue of $2.7 billion, we can expect a market cap of around $5.4 billion and a price target of $65.11. But don't skip yet, because we have to do one final step. Shift is an unprofitable company, meaning they're losing money every year. Where are they going to get that money? Most likely from dilution, which is why we have to factor that into the price target. I'm going to expect dilution of around 50%, which is pretty darn high. They may not dilute 50% of their shares, meaning that currently they have 83.91 million shares outstanding out there. I'm expecting that to grow, or for them to just create 120, or rather for that number to grow to 125.87 million shares by 2025. Again, this is very, or not conservative, but I'm expecting a lot of dilution. Why? Because I'm pricing in the worst case scenario, the base case scenario. We can only get better from here. With that, we get a price target of $43.40 by 2025. Now, this, in my opinion, is the base case scenario. We factored in some of the kind of a big decline in revenue. We're factoring in a low price to sales multiple, and we're factoring in a lot of dilution, meaning that this stock, if they maybe don't dilute as many shares, or they grow a little more than expected, or their price to sales goes up because their gross margin manages to go up, this could very well be a stock that trades $50, $60, $70 per share. But in my opinion, the base for the stock is $43.40, meaning at a share price of around $8.20 where it is today, I think the stock is a smashing deal, and given the minimal risk with their huge revenue growth, obviously you've got a big kind of area of safety with that dilution already factored in. You don't really have to worry about them diluting shares because it's already priced in a big chunk of dilution in this price target. So I think they've got a great management team going forwards. And in terms of what I'm doing with Shift, I have a position built right around break even where it's at right now. I think it's at around $8.10, $8.15 average cost basis. It makes up around 5% of my portfolio. I'd be willing to push that to 7 or 8% if the stock stays stagnant for the next few months or goes down a little bit. This is a great stock. I think it's a great way, or one of the best ways, to play the used car market in the United States. Obviously, international expansion is a possibility, but I don't think they honestly need to expand internationally for the next 5, 6, 7 years just because of the opportunity in the US alone. If they capture that market, this could be a very, very interesting stock and company going forwards, which is why I have a position built. I'm looking forward to this one. I hope you guys enjoyed this video. If you have any comments or thoughts on Shift, make sure to drop those in the comment section down below, and thank you all so much for watching.